Hello, everyone. This is Quese.Trades here. Today is May 19th. It's Thursday, and the purpose of this video is to go over my current trading strategy that I'm using for day trading options. It's been pretty successful. Just a disclaimer, I'm trading a small account right now, and so in this small account, I really wanted to, focus on um, testing out this strategy and consistently using it every single day. That way, the statistics that I get from my trading, it's going to be consistent with this trading strategy. I don't want to change the trading strategy. That way, I won't be able to have reliable, consistent trading statistics to rely on to like evaluate my performance. So just for anyone who's trading and you want to know if a trading system is working for you, or any trading method that you're working on, the best way to do that is to consistently trade using that method over amount of time, and then you go back and you look at the statistics. So whether that's a week, a few days, a week, a month, however long that you need, the more the better. Of course, the more trades, the more reliable the statistics will be. But let's get started here. I want to first start off with the clean chart, which is SPY, the S&P 500. This is the ETF. So this is, taking a, a weighted average of all the top 500 companies within the S&P 500. So this is like my bread and butter ETF that I like to trade daily, especially with a small account. Um, it's really good to trade SPY. So first thing I want to start off with here is, I think a good thing to do is to create support and resistance. So you know, resistance levels are price levels that you create on your chart by drawing a line here with whatever software that you're using for your trading platform. But basically what a resistance level would tell you is it's a price that the stock tried to reach in terms of a increasing price. And so there's the price level that you determine is resistance. It's acting as a resistance from keeping the price from continuing to increase. So for instance, if we were looking at the chart right now, we can say this level right here would be a resistance level because the price was going up. It reached $394.16, and it immediately, or sometimes it doesn't even have to be immediately, but you could tell that there were a lot of sellers here who denied this price from increasing past this point. So this would act as a resistance, or also known as a ceiling, a price ceiling. And so vice versa, we talk about support. So a support level would be a price that keeps the stock, and I want you to understand that support and resistance levels, they're not 100% guarantees, meaning if you draw a resistance level on your chart, that does not mean 100% that the price is going to reject that level. It can definitely break that level, and so then that would continue. That would indicate that the price is in a strong uptrend, and the buyers are in more control, or not even more control. They're more aggressive than the sellers at that price level. So don't just think that the resistance level means that the price is going to reject, or support level indicates that the price is going to bounce. All it is telling you is that there's a high probability that the stock is going to react at that level based off of the action that occurred at that level, either in the past or in live trading time. And so I think that a lot of people, fail to realize that when it comes to trading stocks, nothing is guaranteed. So you have to be able to understand that trading is a game of probabilities, right? So like no one really knows what's going to happen next. If everyone knew that, everyone would be able to do this successfully and be rich, right? But what you do know is that based off certain things that happen, there's a high probability that you can determine what's going to happen next based off using certain trading metrics and methods and stuff like that. So that was just a little disclaimer, but you can see we plotted our resistance line. And so I like to use different colors for my lines. So for resistance, I would like to use orange or red. indicating that it's a resistance level. And then support. A support level means that the price has decreased to a point into which it reached a price level that it then bounced. So it reached a price that it no longer continued to decrease and it changed directions, right? Which means that, okay, let me plot it first so you guys can visually see it, and then I'll get into the explanation of why that's important. So as you can see, let's just pick one, and you can draw multiple lines of support and resistance, right? So let's change the color of this to purple. I like to draw my support levels as purple, my resistance levels as orange. So as you can see here, right? And let me draw an oval so you can really see, what happened here. So you can see that price was decreasing, right? Look, at 9 o'clock, we were at 393, and then price fell from this price level here. It dropped all the way down at $388, right? But when it got to this point, it bounced, meaning it changed directions, right? So we can see here that, you can see price was going down, right? And then once it reached this orange oval, price then went up. See that? And then, so that would indicate that this is a support level, because you can see that as price decreased and it got to this point, the price reversed. Same here. Price was going up. You can see price was going up here, right? But then once it reached this oval, it then trended down, right? So that's the basics of support and resistance. And so what you need to understand about this is what is going on behind the scenes. So when you're trading, you don't want to get caught up in the visual aspects of what you're seeing, because looks can be deceiving. And that's a common term that's known in life, and it's the same in trading. You don't want to rely all your decision making, all the decisions that you're going to be making based off visually what you're seeing. You want to use it and think about the underlying story of what it's saying. So basically, if we just zoom in here a little bit, at this resistance level of 394, this is telling you that there are aggressive sellers here that are selling this stock at prices and at quantities that usually you wouldn't think about volume most of the time, but they're basically aggressively selling the stock that is causing it to reverse, meaning they're causing the price to decrease further and further because of the aggressiveness of their selling. Same here. And you know what? You know why? Because that would indicate value, meaning the sellers are saying at this price level, this is a great price for us to sell. When you think about stock movement, you want to think that at the end of the day, everyone's goal is to make money, right? So you could think that sellers here, this is a good point for them to sell the stock and lock in profits depending on when they bought the stock, or and they want to open up their short positions. And it indicates value. So basically, at this price level, these sellers are believing that the price is too high, so they want to sell. And same here, buyers at this price level, they are seeing that, oh, this price has decreased to this point at 388. This indicates a value that is too low for us, meaning, we believe that the price should go higher, and this is a great value for us to buy. Same here, they believe the price should go lower, so this is a great point for them to sell. So that's the mechanics behind support and resistance and what it means. And so using that knowledge, support and resistance levels indicate your entry and your exit points. So basically, you would want to, if you want to be a buyer, you don't want to buy when the stock is up here, meaning you don't want to buy with the intention that, the price is going to keep increasing because it's at a resistance, meaning this is a high probable price level that sellers will get aggressive and drive the price down. So that's why if you're a buyer, you want to buy at support level because it gives you the highest probability of the stock going in the direction that you need it to go in to make money, vice versa. And here I trade options. So you would buy call options here because you are putting your money on the stock increasing in price from this level. And then in terms of shorts, meaning you're going to make money as the price decreases, you will want to enter your short at resistance levels because that gives you a high probability of the stock going in the direction that you need it to go in to make money. And so you can find multiple support and resistance levels, which gives you multiple different opportunities to get in and out of stocks. So for instance, in a hypothetical, world in which everything goes your way, you would want to buy here at 388. And if these were the only two levels that you had on your chart, you can basically buy at the bottom and you're going to sell at the top, maximizing the most money that you can gain off this trade, and vice versa. Hypothetically, if you were to enter a short position and sell right here, you can sell or buy a put option, open up a short position, and then you can ride it down to the support level, which would be your exit. So in an uptrend, right? In an uptrend, uh, support levels are your entry points and resistance levels is your exit point, and vice versa. When you're getting puts, resistance levels are your entry points and support levels are your exits. So enter, exit, enter, exit. Okay. So that's support and resistance, and that's entries and exits. So let's go ahead and get a clean chart again. So if we look at this, right? So we're going to draw that. Okay, another thing. When you want to chart your charts, this is one thing you need to realize, and it took me a long time to realize this, but this is very important, right? You definitely want to be able to look at prices in different time frames. So the first time frame you want to look at is the daily chart. You want to see how was price, what was the high and low of the previous day. So you can do that by either looking at the daily chart, or what I like to do, I just like to look at the 5-minute chart, and I can just easily see, like, okay, like we said earlier, 394.14, that was our highest area, and our lowest of the day was 387. Plot those two lines first on every single chart you make. And what I like to do is I like to make this red. I like to make it a line, a solid line. This is indicating that this was our highest point of the day. That's going to be important for us when we're looking at what's going to happen with price in the following day. And then this low level here, I like to make it green. So this indicates that this was the lowest level of the day. And so this is important because you can see that this is going to act as hard resistance and hard support levels for tomorrow. So hypothetically, let's say price opens, and as a recording of this video, price right now is at 392. Okay, so price has gapped up. So tomorrow we could see a green day because today we closed red. But as you can see here, the way you want to think about this is if price trades above 394 tomorrow, that's bullish. We just made a new high. Because remember, in trading, you want to be able to identify trends. And so an uptrend means a lower low and a higher high, right? And a downtrend indicates, in an uptrend, you get a higher low and higher highs. So if you see here, you see how our low here was there, was here, and then here. So you see how the lows, the prices go up and down, but it's going in directions in which, if you look at it, the lows are getting higher and higher. You see, the lows are getting higher and higher, indicating an uptrend. And then it's the same, it's vice versa for a downtrend, right? The highs are getting lower and the lows are getting lower. So you see how these highs are getting lower. It made a high right here, and then it made a high right here. So the highs are getting lower and lower. So a key aspect of trading successfully is you have to be able to look at price from different perspectives and different time frames. So that's why it's important to chart on your chart the previous day's high and low, because if the price tomorrow drops below 387, that's bearish, meaning you shouldn't really be looking for calls. You should be looking for short opportunities. So tomorrow, if price stays above 394 on SPY, I'm most likely going to be buying calls. Okay, so yep. So when it comes to support and resistance, that is how I start off with the high and low of the day, which is these 2 points here. Okay. And so one thing that you want to think about, when you're drawing your support and resistance levels, is you want to think of it from a top-down perspective, meaning when you're charting, you want to be able to draw your support and resistance levels on different time frames. So right now, this is considered, even though I drew it on a 5-minute, this is like my daily support and resistance, right? Because if I zoom out, right? Because look, this is on the 5-minute, but if I zoom out to the daily, you see I've charted the high and low of the day. Okay. And so then you want to go to your 4-hour time frame. And so basically you want to get good at being able to look at price from different time perspectives, right? So if we go to the 4-hour, and what makes a good support and resistance level, you want to see price rejections at that level. So meaning they call it touches. So meaning like you want to be able to see, and I like to use the wicks. So a wick indicates that price was once at this level and then it changed direction. So you want to find prices on the 4-hour time frame to which you can see the wick touch a certain price level more than once, 2 to 3 times. So if we're looking here, and I'm looking down, I'm like, okay, where can I find a wick that touched more than twice? And look, I found one at 389 right here. And it doesn't always have to be perfect, but you want it to be close. And so boom, I found one. And what color would I make this? Because right now price is above this level, so I would make it purple, indicating that this is support level right here. So then I'll keep searching. Where can I find another one? You want them to be clean, because the cleaner it is, the more reliable it is. And sometimes you can use bodies. I'm gonna use 390 as one as well. And the price stayed at this level a lot today. And so the reason I'm choosing 390 is because even though there's not 2 wicks that have touched this level, you can see here that we have 2 candlestick bodies that are at this level. So price dropped right here, it dropped all the way down here, and it closed right here. And then I think this was pre-market, price opened here, closed down here. So I think 390, this is about 391 or so. Yeah, it's 391 actually. This is a strong level. Then we'll keep going. Let's see, do we see another one? Look, we found another one right here. This is going to be purple, indicating support. And what you want to do is you validate. Once you draw it, you can make an oval, and you can say, okay, we've seen price touch it right there, it almost touched it right there, and it touched it right here in aftermarket hours. See that? So then that justifies you drawing, or you believing this is a valid support level. Okay, do we see any more here? Oh, look, another one, 392. Now this is going to be orange. Now this is going to be resistance. And then once we get above 394, let's see, we can see 394.97. And then we can see 395.61. Right? That's all you do. And so then once you do that on a 4 hour, is there any more down here? Then you go to the 1 hour, right? Then you go to the 1 hour. And then you see if you can find any more on the 1 hour. So let's see. We see one at 388. Draw this as purple. 387.87 could potentially be one as well. So we can just put that there. And remember, now how our chart doesn't quote unquote look as clean, but it's okay because we know that we drew levels that you know, potentially we can see our support and resistance here. And I'm happy that I can show you this too right here. This is a supply zone. So a supply zone is basically a whole range of price in which there's a high potential, high probability that there's going to be either a lot of buying or selling activity in this zone. So let me take a step back. So as you can see, you see how price tried to go all the way up to 394 and it got rejected. It created this big wick here, and a wick is like a tail. It's a tail of a candle body. So we would draw a supply zone right here. And we come here, we edit this. We want to extend this to 520, and to indicate that it's a supply zone, we can make it red, make it transparent, right? So tomorrow we'll be paying attention to this zone up here above 390, this area between 394 and 392. We can see a lot of selling going on here. And so in terms of buying, like a demand zone, we want to see the opposite. So we want to see a strong wick to the downside that would indicate potential buying. So I see that as like right here. So we want to make this 20, and we want to make this green. Okay. So then when we go back to looking at this on a 5-minute chart, we can see that tomorrow in this zone, there's a potential of high selling activity. However, tomorrow in this zone, there's a big potential of high buying activity. Okay. I mean, yeah. Okay. So this is what our chart looks like now, right? And so basically our next step would be to add our indicators. So let's go ahead to add our exponential moving average. We're going to make this 9, and then we're going to add another one. We're going to make this 21. And we're going to make them different colors. So I like to have my 9 this blue color. I like my 21 to be red. And then we're going to add VWAP, which is volume weighted average price. And this is going to be purple. Okay, so let's just add those 3 lines. Now, as you can see, The chart, it's a lot now going on with this chart, right? And that's because, for one, we have these lines here, which is our support and resistance, and then we have our moving averages, which are these lines here, right? So as you can see here, charts, everyone has different visual, um, everyone has different visual like ways they like to see their charts. And for me, this is just how I like to look at my charts. I like to have multiple support and resistance levels. I like to have my indicators, and it takes away more of the guessing that happens when you're trading stocks, because basically now I'm going to start getting into my trading method. So let's say we were trading, right? So if we were to just remove, let's remove all the lines I created, right? So if we were to remove that, we just have these lines now. And so the blue line, which is the 9 exponential moving average, this blue line that you see here is basically saying this is a line that tracks the average of the price over a certain amount of time. So if our input was 9, this means that this is tracking the average of the previous 9 candles within the time frame that we're looking at, right? So since we're looking at this on a 5-minute chart, this is taking the last this is taking the average of the last 9 candles within a 5-minute time frame. And so then our red line is a 21 exponential moving average. So this is taking the average of the last 21 candles in a 5-minute time frame. And then we have this purple line, which is our VWAP, which is basically saying this is taking the volume weighted average price of the stock in this 5-minute time frame. So basically my strategy is I like to use these 3 lines, and there's an order in which I like to see these lines stack up with one another. So I like to see, if I'm bullish, meaning I want to buy calls, I want to see the blue line above the red line and above the purple line. Okay. So if I'm bullish, I want to see this blue line above these other 2 lines. And if I'm bearish, it's going to be the opposite. I would want to see this blue line beneath the red line and the purple line. It's simple as that. So when I see that on my charts, I know that's a signal for me to either start looking for either a buying opportunity or a selling opportunity. And so and once again, it's not going to always be perfect, so it's like, it's not gonna, you don't want to just every time you see that you just want to buy or sell. It just basically gives you a good indication that the trend is happening. So for instance, if you were to look at price from here to here, right, you see this blue line is above this purple line and it's above this red line. If you were to buy right here, you could have taken advantage of SPY increasing from 389 all the way to 391, which is about what, $3, almost $3 or so. Not accounting the cents involved, but you can just see how it's a good indication that it's in an uptrend. Of course, it's going to be hard to always catch the immediate bottom, but if you would have missed your entry down here, you could have waited till you seen your signal to see this blue line get above this purple line, and you could have bought. And also, it's vice versa for shorts. So if I see this blue line beneath the red line and beneath the purple line, then I would want to look for puts. And see, look here again. You see at this area here, uh, you can see the blue line is above the red line and it's above the purple line. And look at that, another big move that you could have captured, right? And then vice versa. Um, let's see. Right here, we had a crossover. We had the blue line cross this red line here, which indicates possible, downtrend. However, the lines never got beneath um all right, sorry about that. Someone called me, but back to the charts. So let me see here. So yeah, I mean, there wasn't too many indicate, and today is a hard example of this because the price action was all over the place with this chart. Like if you zoom out, like you can see like this is not clean price action. Like, yeah, you got a few signals here, but this is definitely um like not a good day to trade, honestly. Like if we look at a previous day, like yesterday, look how clean this downtrend was. You see this blue line beneath the purple line, beneath the red line. And I mean, this made history yesterday. This was the biggest drop since 2020, right? And look how strong this downtrend was all day, all day. So if you would have noticed that this blue line was beneath the purple line, beneath the red line, which in technical terms, your 9 EMA exponential moving average was beneath the VWAP, which was beneath the 21 exponential moving average, that would indicate a downtrend. So on different days, you'll have different price action that looks clean. So that was clean. Look at today, see a lot cleaner. You see how right here we got the 3 moving averages moving in that same way, and then they cross, and then look at that, then once they cross right here, that uptrend. So today was just disgusting of price action. um yeah, just disgusting. So that's how I treat my exponential moving averages in VWAP. And so lastly, what I want to get into is the TTM squeeze. So the TTM squeeze is a momentum indicator. So let me go ahead and load my style real quick of when I trade, right? So I'm gonna use yesterday's price action just to give you this example here. So basically the TTM squeeze, what you want to look for is you want to look at this histogram down here. So basically, um, the first thing you want to take a look at is, let's go ahead and make it bigger. So the first thing you want to take a look at is the color of the dots. So what that means is if the dots are, let me get rid of these grid lines. So the dots, the color of the dots indicates, it's called the squeeze. So basically the you can edit this how you want, but if the dot is a certain color, it indicates that the price is doing a certain thing. And if it changes color, that means something has changed with the price, with the behavior of it. So the way I have it set up is if the color of this dot is blue, that means that um, the stock is trending in a certain direction and it's not consolidating. But if the color of this dot changes to red, that means that the price is consolidating, and that means you don't want to enter into a position when the stock is consolidating, because consolidation means that the price is going up and down between a certain price range. It's not really moving in one direction significantly. And so you make the most money when you purchase a stock that is trending in one direction over a certain period of time. So I use my strategy above, which is, my EMAs, my 921 and VWAP. Once I see all of that, then I'm looking at volume, which is the next thing for a signal. The color of this volume bar needs to match what I'm seeing above. So if I'm seeing, and which it will, because that's just how it works. Like if I'm seeing these three EMAs stacked like this in the bearish way, which is the blue line beneath the purple line beneath the red, the volume needs to be read as well, meaning that there is more selling activity going on than buying. So that indicates I need to be looking for puts, and that the price is gonna keep dropping down. And then when I look at my histogram, now I'm looking at the color of the dot. If the color of the dot is blue, that means this is good for me to get into a position. I just need to wait for the right opportunity. And so the color of the bar here is red, which means that this is telling you that the price is momentumly decreasing. And so there's different colors of these bars. So the way I have it set up, if it's red, that means it's in a strong downtrend. Once the color turns to yellow, that indicates that it's a possible, like the price is in a downtrend still, but the momentum of the downtrend is decreasing. So that could indicate a possible reversal. So as you can see here, if you look at this yellow bar, look what color the volume is. It's green, and then we got a green candle. So it's like this stock potentially could have reversed right here, potentially. And then if it was going to reverse, you don't want to see the length of these bars start to decrease, because once it becomes bullish, the color of these bars will change and they will be going in a different direction. But as you can see, this is one of the strongest selling days I've ever seen. So you can see look how big the the price was to the downside, just heavy, 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 heavy selling. Um, So then vice versa, when you're looking at the TTM squeeze and you're looking for bullish momentum, you can see here, and here's a prime example. So you see here, these dots on this histogram are red, which means the stock was pretty much consolidating. Let's just say from like here to here, meaning like you wouldn't have wanted to get in a position right here when these dots were red. But when they turned blue, you see, that indicates that it's a high, and remember, nothing is guaranteed in trading. You want to take everything objectively, and like it just, you want to think in probabilities, like you want to make sure the probability is stacked in your favor. And the way you do that is you have all these different signals and indicators, and they're supposed to increase your confidence and your ability to make a decision and kind of, quote unquote, predict what's more likely to happen next, um based off, like, price fluctuations, because that's how you make money in trading. You're trying to take advantage of a price fluctuation because there's constantly buying and selling going on per second. um so when these bars are green and the dots are blue, that indicates bullish momentum, right? And then when they turn white, that indicates that the uptrend is decreasing, is losing momentum, and it's potentially indicating that a reversal can happen. Because I can see, look, as this bar turned white, the volume went red, and we got a red candle. And then look what happened next. Price went down. So see that price went down. So around these white bars, see? So yeah, that's my trading strategy from an indicator's perspective. That's how I trade. Those are all my signals that I'm looking for in terms of indicators. So I have my 3 average, I have my 2 averages, my VWAP, I have volume, and then I have the TTM squeeze. So I'm looking at all of that at one time, and I'm making a decision of whether I should be buying or selling. And then I have my support and resistance levels as well, right? I have my support and resistance levels, which is telling me when I should buy and sell. Like if you think about it, uh, all of this, all of these lines that you're seeing on the chart and these bars are all here to tell you when to buy and sell. That's as simple as it is. And you know, today, like this looks very messy just because the price was messy, but you want things to look clean, you know. So once the longer you look at charts, the more your eyes start to get trained to distinguish like what's important for you to be looking at. So like some people, they'll see this and be like, oh, like I would rather like look at a chart like this. That's perfectly fine. But like everyone's different, you know. So if I was looking at this chart, it looks clean, like it looks pretty, but is it giving me enough information to make the best decisions? And my idea, no, because I don't know where my support and resistance levels are. That's all this chart is missing. These lines are cool, they can stay, but like once I add my support and resistance, this is letting me know like, okay, if I bought up here, I need to be selling around right here. And then if we keep seeing these support levels keep getting, you know, broken, this indicates strong momentum to the downside. So like all everything you put on your chart, you want it to be able to help you make a decision. You don't want anything on your chart that's not helping you make a decision. So that's my trading strategy from an indicator perspective. And then and the last point I want to touch on is candlesticks. So I don't want to get too much into like the beginning and anatomy and analysis of like candlesticks and candle bodies. I can just say like, you know, red indicates price is going down, green indicates price is going up. These wicks that you see indicates that the price was once at these levels, and the candlesticks make different patterns, right? Because like stocks trade in patterns, like it repeats itself. So once you see certain patterns, you need to understand that that's saying that price is doing something, and it's going to continue doing it in a certain behavior. So there are particular candlestick patterns that I look for. And I found this on Binance. This is a good resource here to go ahead and study. This is the 12 popular candlestick patterns used in technical analysis. And you don't need to know all of them. You just need to know a few. And I'm going to quickly go over these patterns. So the first one is the hammer, which means you can see here the hammer is green. And you will see this at the bottom of a downtrend. And so, and like you see here, long lower wick at the bottom of a downtrend. And what this indicates is that the buyers are strongly rejecting prices at a certain price level. And this wick here, it'd be perfect if this happened at a support level, because that would just tell you that the buyers are getting aggressive. So if I see this hammer, if I see a downtrend and then I see this hammer form, I'm gonna start thinking possibly bullish, because look what happens next. Change of direction. And then the three white soldiers. I love this pattern here. Basically, there's a downtrend, and then you get three big bullish candles. And I trade on the 5 minutes. So this would be 5, 10, 15 minutes of just buyers dominating the price, which indicates an uptrend. So if I see the three white soldiers pattern, that's good for an uptrend. So the hanging man, I don't really look at this one too much. I would rather the shooting star, I would say, is like, because you see this long wick. This long wick indicates that price got rejected at this level, and it closed, you know, lower than what it opened at. Is red. So this, once I see this pattern, this indicates that potential downtrend is going to happen next. Same with the three black crows. If you see an uptrend, and look at that, you kind of see this red, almost not a really big shooting star, but it is, just the wick isn't that big. And then you see three consecutive big red candles after you see an uptrend, and you see them consecutively. This means downtrend, like bearish, right? Continuation patterns. This is quote unquote your bull flag and your bear flag. So if you see a big bullish candle, and these big candles, and so you'll see this big candle, you'll see it start dipping, right? You'll see it start dipping, but you'll realize that the dip doesn't go below this first bullish candle, this big candle here. And then if you see this next bullish engulfing candle means the price, the body of the candle engulfs the previous price activity completely. So you can see here that even though the price dipped in these three candles, this one candle engulfed all these candles here. So it goes up, down, and then boom, up. That's a bull flag. If you see this, this is bullish. You want to be buying calls. And this is a bear flag, which is what they say they're falling three methods. You see a long range, and since we're in a bear market, you're seeing this every day, all these bear flags. This is, and you gotta think about it. The price is telling you what's happening, right? So bear flag means bearish, means selling. They are selling, selling, selling. So you want to be selling. You don't want to be buying when everyone else is selling. So if you see this long red down candle, and you see it increasing, increasing, but it's not, it almost covered this, but you see it got rejected. And then you see a long, big red candle here, bear flag. You don't want to be buying there. And dojis, these are cool. These are, they're not as important, but it just indicates like an indecision. And yeah. So those are the candlestick patterns I'm looking at. You know my trading strategy, which is my 9 EMA, 21 EMA, VWAP, support and resistance, supply and demand, volume, and the TTM squeeze. So that's my trading strategy. Hope that was helpful for someone, and good luck trading. So we'll keep analyzing the strategy and looking at the statistics. I mean, right now I have an 80% win rate with this strategy, so I'm not gonna change it at all because obviously it's working, right? At least from how as many trades that I've taken, uh, it's working so far. So if I was to start seeing negative statistics, right? If I was to start seeing my win rate become really low and I'm losing money, then I'll know I need to change something. But the fact that it's green and it's high, mean it's working for me. So I'm going to keep doing it. And like I said, everyone's different. Everyone's going to have a different strategy. Something that works for me might not work for you. Visually, you might not like to look at your chart how I look at my chart. So the goal is to find what works for you. But this is what works for me, and I just wanted to share that. So yep, hope this was helpful.